My guest today is Spadaboom. Yes, indeed. Spadaboom is the founder of BadgerDAO, a Bitcoin focused DeFi protocol. And yeah, well, BadgerDAO are working on a new project. We'll learn all about it today. Also, kind of like Bitcoin DeFi. It's called EBTC. But as I say, we'll talk all about it. Welcome to the show, Spadaboom.
Thanks, Andy. Appreciate it. How you doing?
I'm doing good, man. Let's do what we do at the beginning of the show. Love to just hear a little bit of your story, really. So please introduce yourself. Love to hear some personal and professional background, what you've been doing in the lead up to getting involved with, I guess, pushing the Bitcoin DeFi narrative forward. And look, at the same time, Spada Boom, where does that come from?
Bada boom. Oh, so that was a nickname my dad had. That goes off of our back my last name when he was a kid in the pool rooms, and his brothers used to call him that. And as I got older, I kind of took it over. So it became my online identity, and, and whenever anybody says it, they laugh. So that makes me happy.
Nice. I like it. I like it.
Yeah,
All
yeah.
right. Well, tell me some of your story.
Sure, Andy. So, I've been involved in this space for almost 10 years. Proud holder of the Bitcoin that I bought 10 years ago, 11 now actually. And I spent, much of the first 5 years just kind of being deep in the communities online and watching the space progress. I'm from Toronto, the home of Ethereum, so I always had this kind of intersect that started into Bitcoin, and then Ethereum came around, and I became very interested in what they were looking to do. And I never felt that I was, in either camp, let's call it. I was very open-minded to what that world looked like on both sides of the fence, where in many other cases it was more tribalist in nature. And I then spent much of my early career while just being in Bitcoin, in technology sales, and eventually into online marketing, e-commerce, digital marketing, things along those lines. And in about 2016, in that range, after spending some time away, I came back to Toronto, and there was kind of this explosion of new projects launching. This is kind of right around the ICO craze that was happening during that time, if you recall. And a lot of the tech folks were like, "Hey, we need people that know, marketing and business and sales and all that stuff." So I started helping quite a few projects and investing quite actively over the course of the next, well, I guess that bull run and then that very painful bear market that followed. And and I found myself seeing a lot of projects that, were what I would call like these black boxes. Many of them became popular in the last downfall, unfortunately, with billions and billions of dollars. But it was this premise of like, oh, you should do stuff with your crypto, like give it to us, and we'll put it to work, and we'll give you interest and all these types of things. And unfortunately, I found myself getting caught up in a couple of those, both with my own crypto and some of the work I was doing with these folks. So I decided in late 2019 that um, I wanted to build something transparent that allowed you to put your Bitcoin to work. And I really focused on Bitcoin not only because I was and I continue to be a Bitcoin proponent, but I just felt like, there wasn't much utility whatsoever for Bitcoin, and we needed something. And I started my journey looking into how to build on Bitcoin and some of the kind of side chain type solutions at the time, and it just really wasn't that plausible. And that's where I decided, let's do it on Ethereum. And this is when a lot of DeFi protocols really started to accelerate. And there was some good use cases for how to potentially earn yield and lend and LP and some of these kind of basic primitives. So in the end of 2020, I got together with a few folks and we launched Badger DAO, which was a DAO focused on building cool Bitcoin DeFi oriented protocols. And that entire ecosystem was owned and managed by token holders. So it was one of the first kind of early DAOs, early DeFi protocol DAOs. And over the course of the last 3 years, or three and a half, we built a lot of really cool stuff, from yield products that had, $3 to $4 billion in them, to Bitcoin bridges, to synthetic Bitcoins, to a variety of things. And, over the course of the last year and a half, it became very clear that there wasn't some really strong utility for Bitcoin, even though we built some of these products. That not only was the tech not as ready, there was a lot of centralization reliance on certain synthetic Bitcoins in the space and bridges like RenBTC and WBTC and so forth. But we just needed more use cases for Bitcoin. And we also needed something that was more smart contract or decentralized or transparent in nature. So that's kind of what led us to, what we decided to build in the last year plus, and that's a little bit about myself.
I like it. Thank you, Mr. Spada Boom. I think what would be a really nice way just to kind of set up a little bit more context. I mean, you've done it a little bit already, but it's cool that you're a guy that is, I guess, had some Bitcoin, been involved with Bitcoin for what 10 years, did you say? So it's longer than most. So obviously you've seen um, Bitcoin's almost full journey, going from a kind of digital collectible with no real value, through the various stages to where we are today. And now, of course, we've got the Bitcoin ETFs. Seems to be a relentless wave of fresh capital coming into Bitcoin via those ETFs, which is amazing to see. And even more, I guess, relevant to what you and your team or the other contributors are building via BadgerDAO and eBTC is there's suddenly a narrative around Bitcoin DeFi, and suddenly you can do more with Bitcoin. So maybe just use that as context any way you want, but just talk about that kind of evolution. Spada boom.
Yeah, I think in general, what we've seen in the last 10 years is the proliferation of BTC, the asset, which is a product of the state of the network, right? The network was really well positioned to create arguably the hardest money that exists or sound money that is Bitcoin and the best digital store value. And it did a wonderful job at that. And I think as part of that and the grassroots nature of Bitcoin and the decentralized nature of Bitcoin, it's proliferated to become, today, I think a top 15 asset in the world. I imagine it to be a top three asset, in the very near future. I think this is really just the first ending of, what Bitcoin will become as an asset and a global recognized asset. And the ETFs really just show how much capital was just eager for these investment vehicles. It's absolutely insane, what we've seen, and I can only imagine what's happening with some of these ETF issuers and their types of expectations of what they thought was going to come and what the standard was set. Like the Bitcoin ETF so far, and it's only been a month, are already outperforming any ETF launches and capital acceleration in the last 30 years. And this is just a start. So now it's going to be this, they're all scrambling to motivate their groups to tap their network. And this is like more just like reactive incoming capital, never mind when they start putting the proactive work forward. So I do think this is the first indication of where we're going. And it's really about, again, this not the institutionalization of the asset, but the proliferation of Bitcoin just becoming this massive, massive, accessible global asset across kind of all ranges of the stack. And I think, with that happening comes this renewed interest, right? You hear it online, people talking about like Bitcoin season two of builders and holders and things along those lines. Bitcoin was a very anarchistic, libertarian oriented group in the beginning.
Mm.
Arguably, it's moved further and further away from that. And as it becomes more mainstream, I think it'll just continue to move further and further away from that. And I don't think that's a good thing. I don't think that's a bad thing, right? It's not about if it's a good or bad thing. But right now, we're seeing such renewed interest that there's this additional appetite to do more with Bitcoin. And I think that comes with an asset that becomes as popular, as big, and really transcends as it has, that naturally And if you look at a lot of other asset classes, there's so many forms of like synthetics and derivatives and all these things across all different kind of parts of the stack, from institutional to retail and so forth. And we're really starting to see that wave happen on the Bitcoin network, and how the Bitcoin network is being looked at much more as a platform and separating itself a bit from the asset, right? And with that, this is where this like Bitcoin DeFi craze, we've seen the ordinals explosion, and what I've seen, at least, specifically as a builder, the last 3.5 years, tied directly to Bitcoin DeFi is, 2, 3 years ago, we saw this wave of WBTC. So, for your viewers that aren't familiar, WBTC, or Wrapped Bitcoin, represents 90% of the tokenized Bitcoin market that's used in DeFi today, and it's primarily used on Ethereum, and it's primarily used to borrow stable coins. That's like its main use case, or LP for trading. And there was this wave in 2021 where the supply of tokenized Bitcoin, WBTC in particular, just exploded, right? It went crazy to the point where over 1% of the entire Bitcoin supply, native Bitcoin supply, was in WBTC, which is a permissioned minted tokenized Bitcoin. But when you look under the covers, it was really a few actors that were minting this WBTC and bringing it to Ethereum and participating in DeFi and other things. For the most part, it wasn't Bitcoin holders, as we would call them, a large quantity of smaller holders taking these actions. It was more like two very centralized groups doing massive amounts of this. Their names, are pretty well known, or used to be, at least. But nonetheless, the what we've seen with ordinals is now a lot more quantity of smaller participants, and this appetite to actually use Bitcoin in different ways, if that's to do trading and speculative activities, NFT oriented stuff. That was really the beginning. And I feel like it's unlocked again this appetite to do more with your Bitcoin. And it's something that I think is going to push active development on the network to be much more of a platform than it is today for building applications and other forms of financial instruments. And I think DeFi is, the prime candidate for that.
Yeah, that's very, very well said, Spudaboom. And, interestingly, I'm sure you noticed, but, about earlier this morning, about a few hours ago, just with Bitcoin's current price surge, US price now about 51,800 at the moment.
Sweet.
And it means
Sweet.
that Bitcoin's total market cap is now back over $1 trillion. Which is amazing to see. And you do get the sense that we're just getting started. But you're exactly right, Spudaboom, in that, yeah, there has been a transition now. People are more able to clearly differentiate between Bitcoin, the asset, and Bitcoin, the ledger, or Bitcoin, the rails. And now, yeah, as you've talked about, we've got all these different use cases such as ordinals, Bitcoin DeFi, and so on, which really leads us to, what you're doing with eBTC. And funnily enough, of course, this is all tied back to Mr. Ethereum. And I love that you're from Toronto as well, kind of, yeah, a hotbed for Ethereum. So, yeah, eBTC, what's the I guess the big idea here? What's the big thesis? What's the origin story? What are we doing here?
Well, I think it goes in line. I'd love to continue to use like Bitcoin the rails and Bitcoin the asset as a
Please,
key
please.
differentiation. So, I think in general there's still quite a bit of work to be done on Bitcoin the rails. And I do think some of the excitement is a bit premature, because not only is it that much harder to create certain levels of innovation on the base layer to allow for these extensible layers on top of Bitcoin, because Bitcoin isn't purposely built as rails to do what something like Ethereum was purposely built for. But again, Bitcoin, the asset, as it continues to proliferate, there needs to be additional use cases and utility for it, both on the network and outside of the Bitcoin network. That's where the majority of our, building efforts the last 3.5 years have been on the Ethereum network with Bitcoin, the asset. And how do you create additional utility for that? And I mentioned earlier WBTC. So WBTC represents, again, 90+% of tokenized Bitcoin. And for anybody that's not familiar, it's a custody Bitcoin. So it's a centralized Bitcoin. And we just never believed that that was the answer. I feel like it was a great starting point to really get things off the ground. There has been very little to no growth in the asset the last year or two. If anything, it's been just continuing to decline. And we think the demand for Bitcoin on Ethereum and other networks for that matter is one that requires a certain level of alignment with the principles of Bitcoin around transparency and decentralization and censorship resistance. And at the same time, we need more things to do with Bitcoin. So when we went to the drawing board thinking about this thesis, how do we create utility? How do we create a more decentralized Bitcoin representation? We thought about one of the most actively traded pairs um, on in crypto in general, the ETH BTC ratio, right? And we thought about the correlation between Ethereum and Bitcoin and these two assets in particular. And we also thought about, at the time, this is before Ethereum switched to proof of stake. And one of the core pain points that we always had as builders is there just never was any sustainable yield for Bitcoin representations in DeFi. There was just way too much capital and way too little yield resource or yield opportunities. And and that happened with a lot of things. We saw stable coins like go up and down in terms of their yield opportunities and appetites for holding them. We've seen that across the board with a variety of different altcoins, and Bitcoin was no different. But then, with Ethereum moving to proof of stake, there finally was a sustainable source of yield that was coming out of, the efficiency of ETH staking. So that was kind of the light bulb for us, which is like, wonderful. We now have a way to potentially um, create additional utility, create a more transparent Bitcoin representation, and have some type of closed loop way to drive yield on this Bitcoin asset. So what eBTC is, as we like to call it, is the best place to borrow Bitcoin in the world. So it's a smart contract. It's a mutable smart contracts. So completely transparent at all times. You can see everything that's going on. These smart contracts can't be changed or adjusted by humans. So it's not like, yes, there's a smart contract, but two people can collude to, change the capital around or whatever. And what it allows you to do is it allows you to use your Ethereum or your ETH to borrow eBTC. And what happens is it's a collateralized deposition protocol similar to DAI from Maker, if people are familiar with that stablecoin concept. And what it does is the smart contracts have these specific parameters and rules. One, for example, is you have to have at least 110% of the collateral, in this instance, ETH, to mint eBTC at a minimum. And then what we've done, and because of the economics associated with ETH staking, we can now create a new economic environment around this borrowing facility. So for example, you can use your ETH and you can borrow this eBTC at although over collateralized nature, still significantly lower over collateralization compared to alternatives in the market, and definitely compared to centralized lending options. But we actually stripped all the fees from the borrowing facility. So it's actually free to borrow. And you say, well, how is that even possible? Well, it's because of ETH staking. So we take that ETH, we stake it for the user, and we take a percentage of the ETH stake. The protocol takes a percentage of the ETH staking yield as its fee. So in essence, the user is actually being paid to borrow Bitcoin, which is pretty cool. And now you have a deposition or a loan, and instead of it being tied to the USD value of Bitcoin going up and down, it's tied to Ethereum and Bitcoin value, or the ETH BTC value, which is significantly more correlated, which lend itself to much lower liquidation risk compared to USD-based borrowing against crypto assets. And in doing this, you now have this eBTC in your hand, and ideally over time, there's other things to do with it across DeFi. But what is that eBTC? That eBTC is exclusively smart contract based. That is decentralized. That is transparent. That does speak to, assuming the censorship resistance of the consensus layer in this term, in this way, Ethereum in particular. So it's a big step forward. It drives additional utility for Bitcoin, and I think over time, it has quite a bit of opportunity in front of it.
Yes, indeed. I'm curious, Spadaboom, when you're building out this protocol, who are you thinking of when you're building it? Are you thinking of, existing DeFi natives? Are you thinking of, Bitcoiners or Bitcoin whales who have a big stash of Bitcoin and are looking for something to do with it, or everyday Bitcoiners who perhaps need to, access some form of borrowing? Who, or is it kind of all of the above? Who are you thinking about?
I think it's the first group, to be honest with you, Andy. In the end of the day, this is a protocol for people with ETH to borrow Bitcoin, and you can open up a variety of strategies. You can do 11x leverage. You could sell the Bitcoin you borrow, so now you're long ETH BTC. You can use that Bitcoin to maybe borrow dollars and be in a long ETH BTC and long BTC USD position. But really, I think it speaks to DeFi native participants that are just looking for a better borrowing facility compared to some of the money markets that are out there, some of the CDP solutions that are out there. And that's the starting point. And I think what happens is, over time, the more people that use this facility, that means the more eBTC comes into market. And the more eBTC and market cap growth, I think it's there that potentially Bitcoiners, and most certainly people that already have tokenized Bitcoin but want a more decentralized option can now say, okay, I'm just going to go and hold this more decentralized Bitcoin. That doesn't mean they would have had to open up a loan. That doesn't mean they would have ever had to, do anything with ETH to get that. They simply could just swap whatever Bitcoin representation they have for this. And obviously that's a product of, you know, what type of smart contract risk am I taking? How big of a market cap is of this asset? How stable is this asset? And things along those lines. But I think over time, as more integrations come to the forefront, as the supply grows, there's going to be the ability to tackle more of the Bitcoin folks that again just want to hold something more decentralized in nature, more transparent, and more aligned with the ethos of Bitcoin as a whole.
Yep, yep. Very well said. I love how at the moment you kind of got, when you go to eBTC, it says there's kind of three options, three trades, or three options you can do. One is long the crypto market. You kind of talked about that. You can trade the flippening, or maximize your ETH yield. So maybe just really quickly, just kind of explain why you've structured it like that, and yeah, those three options.
Yeah, sure. So the first one, right, get exposure to the crypto market is if you're in dollars and you now can get exposure to ETH and Bitcoin in taking this activity while earning ETH staking yield. It's kind of like the trifecta of if you have dollars and you're not exposed and getting exposed, you now earning ETH staking yield, you have exposure to the two top crypto assets. And it's a pretty easy way to do it with a couple clicks of a button. So that's the first piece. Trading the flippening is naturally if you borrow an asset and then sell that asset, doesn't matter what asset it is, you're technically long the collateral and short the borrowed asset or the debt asset. So in this instance, the flippening, for those that are unfamiliar, is this, some would say, unrelentless belief that Ethereum will eventually flip Bitcoin in terms of market cap. So you would want to be long Ethereum versus the price of Bitcoin, or long the ETH BTC ratio. Again, this ratio is something that people trade, arguably some of the most actively traded ratios in the space. And if you were to borrow EBTC using your ETH and you were to sell that EBTC, you're essentially short Bitcoin against ETH. And if you're right and the ETH outperforms Bitcoin, you'll be able to close that position down the road in a profit, right? So you would have taken that ETH that you sold that EBTC for, buy more EBTC cheaper, close your loan, and you'd be net up. So those are kind of the two core use cases. And in terms of maximizing ETH staking yield, so it's interesting, it being exclusively smart contract based, you can create smart contract automations. So as an example, as I just talked about in the flippening trade, if you were to take ETH and borrow EBTC and then sell that EBTC for ETH, you could technically open up another loan and get more EBTC and sell that EBTC and open up another loan and do that as many times as possible until you kind of max out. If you were to do the minimum over collateralization ratio of 110%, this protocol allows you to do that at a maximum of 11x leverage.
Mm.
So if underneath the hood, the protocol is staking that ETH, if you have ETH and you borrow BTC, you're now earning that 3.5% staking yield or whatever the yield is. And say you started with 100,000 and you borrowed EBTC, you then sell, you're earning yield on that 100,000. You then sell the EBTC and maybe you get another 60,000 of ETH and you borrow that. Now you're earning yield on 160,000 of ETH, and you do that as many times, and you're earning yield and you're leveling up the yield on that collateral asset, in this instance ETH, as many times as you did that leverage loop. And it's all, again, automated at a smart contract level. To the user, it's abstracted, so they would just click a button and choose what they want to do, and that would happen. So that's intended to come out, that automation feature, probably within the first couple months of EBTC being live, and for a variety of reasons. But one, it needs to get off the ground first before there needs to be liquidity pools to do some of these types of things.
Yeah, well, just on that point, then, Spadaboom, as we do start to finish off this part of the podcast, yeah, roadmap, go live date. What does that
Yeah.
start to look like?
So it's definitely been a journey, I'd say, as a builder, actively involved in DeFi. It's by far been the most security rigorous exercise that I've been a part of. And EBTC is ownerless. It's a set of smart contracts. It's completely open source. There's no licensing on it. Anybody can view the code base today. So really, we're at the last stages of this being kind of ready for the world to use it. I think what's interesting about building in this capacity is that, once it's out there, it's out there. You know what I mean? And if there is an issue or vulnerability, it does require a complete redeployment. And so there's obviously a lot of precautions that need to be taken beforehand. But the intentions for EBTC to be available for everybody by the end of the quarter. The final stages of the security rigor start on Monday. There's a bug bounty pre-launch with a group called Immunefi that we were one of the first groups to work with them. We've been working with them for a very long time. They're a great group of people and community and protocol. And that bug bounty will last a couple weeks, and assuming there's no additional vulnerabilities that are found there or any vulnerabilities at all, then there would be kind of working towards syncing it up for anybody to use. So by the end of the quarter is the game plan, and then from there it's really focused on adding some of these automation functionalities, which includes leverage, which includes auto trade the flippening, which includes being able to do leverage and trade the flippening and do that with ETH, WATH, wrap staked ETH, staked, a variety of, ETH variants, as you want to call it. And I think, from there, one of the most important next steps is going to be integrations. There's enormous capital sitting in different protocols and applications that are already comfortable using CDP-based systems, are already comfortable participating in money markets and borrowing against their ETH and all those types of things. And because of the efficiency that comes with this system, its low over collateralization ratio, its lack of fees, and some of the automation tools, this is a prime candidate to kind of suck in some of that capital. So having these smart contracts integrated in there or in those places, and then from there having EBTC grow a market cap and having that asset integrated in different utility functions across DeFi is really what the first 6 months are going to be about.
Got it. Thank you, Spada Boom. Just before we go to the break, real quick, just for anyone that wants to take a look under the hood, or just at the website, just at the app, or potentially get in contact, get involved. What should people do? Where should they go?
So you can check out Badger at badger.com and EBTC at ebtc.finance. There's a live DApp running on testnet with a bunch of instructions on how to try it out. So I would encourage everybody to play around with it. And then that would be where, if when it goes live, if you want to actually use it, it'd be, in the same application. So that's what I would recommend. And then as well, across Twitter, both Badger and EBTC are pretty active.
Awesome. Links, of course, will be in the show notes, people. Let's go to a very quick break, and then we'll come back. We'll have some fun. We'll run Spada Boom through the very famous Crypto Conversation hot take round. Back in 1 second. And look at that, we are back. And I'm with Spada Boom. Spada Boom, of course, the founder of Badger DAO, and now working on EBTC. Very interesting DeFi protocol to, help unlock Ethereum and Bitcoin work together. Very interesting. Spada Boom, I like to finish each podcast with a quick round of rapid fire Crypto Conversation hot takes. Are you up for it?
I'm ready to rock. Let's hit it, Andy.
All right, my man, just going to run some questions at you. No right or wrong way to do it. Just want your kind of honest answers, kind of rapid fire, hot take style. Question one for you. Where would you say that you sit, Spada Boom, on the Bitcoin maximalist to multi-chain opportunist spectrum?
I'd probably say I am 75% of the way towards the multi-chain group. I sit between, as some people would say it literally this morning, you got Bitcoin season 1, you got Bitcoin season 2, and you got crypto people. I'm probably in between Bitcoin season 2 and crypto people in that range there.
Nice. I like it. What would you say then is your firmest conviction crypto opinion?
That Bitcoin will be the most valuable asset in the entire world.
Nice. And look, just to go back to the kind of the maxi thing, obviously, as you know, crypto is full of tribes. We've got the Bitcoin maxis. There are the ETH maxis who, they want to flip in Bitcoin. You got Team Solana coming up hard. There's always a new team. Why can't we all just get along?
I've been asking myself that, Andy, for a very long time. I think naturally, it is one fight, right? And I do think over time that has to converge, or else our whole industry as a whole won't be successful. So, it's just so early days, right? It's all very, very immature tech, very, early progression towards some of the ultimate goals around creating truly decentralized financial rails, creating, global money and currency, and some of the things that we always dreamed about happening. And the reality is it's going to take, in some instances, hundreds of years, right? This may be the beginning of, hundreds of years of progression towards some of those goals.
Yeah, very well said. All right, look, Spada Boom. Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. As a blockchain Bitcoin builder, you'll be kind of familiar with those kind of frustrations. But look ahead 10 years, anything you like, DeFi, Bitcoin, what does it all look like in 10 years' time?
It's such a tough question. I genuinely, and I may be a bit biased, but I just continue to see these financial rails on blockchains growing and growing and growing and becoming more widely adopted, especially in places where they don't have sound financial systems. I don't even know if they would call, North American financial systems sound at this point, but nonetheless, those that are unbanked, I think that is the first, real opportunity for these rails to shine. So there's still a lot of work to be done there. I think, Bitcoin, the asset, continues to have this meteoric rise. And I hope to see, Bitcoin, the network, also be a platform for building some of these phenomenal financial applications. And I obviously think that Ethereum will continue to be, a major platform for these things to live. And I do think that, subsequent to those points, a big driving force across the board there is going to be stable coins and digital dollars. And I do think today, at least, and this is probably not going anywhere anytime soon, it is the first killer use case outside of store of value that we've seen through blockchains and through crypto. And I only can imagine for that to grow.
Yes, indeed. All right. Well, another way of thinking about this is a quote by William Gibson, who famously said that the future is already here. It's just not evenly distributed. Can you think of an example, Spuddaboom, of the future being here right now, but most people aren't aware of it?
Yeah, I think Bitcoin's a great example of it, right? Like right now, for a few bucks, you can send this money anywhere in the world, um, without middlemen, without going into banks. All someone needs is a mobile phone, without credit scores, without any of that type of jazz. It's two individuals potentially making a multi-billion dollar transaction, and it's built on the foundation of, a decentralized trust network, not a promissory trust network that is, the banks today and, everyone in between. So I'd say we are looking at the future. It's pretty hard to do for most people. So we still got a long way to go, but the actual ability to execute what I just said is there, and it happens, it's probably happened, I don't know, 100 times since we've been talking. Not obviously at that size, but more than 100 times, right?
Yep. Yes, indeed. All right. Brings us nicely, really, to our final question, which is, what is your favorite science fiction book, film, or TV show?
Hmm. Hmm. Science fiction. Um, I would say Lord of the Rings, 100%.
Mm,
Lord of the Rings was always one of my favorite. I remember when they all came out, and I would go into the movie theaters and watch them, and read all the books. And I remember when The Hobbit came out, I was so stoked at that, you know. So yeah, I'd say Lord of the Rings for sure.
yeah, great. Obviously, great books by Tolkien, and yeah, I mean the films, and The Hobbit, famously filmed here in New Zealand, where I live. So yeah, also a favorite.
So we
Look,
didn't plan that, Andy. We didn't
no,
plan that. No, we didn't plan that. No, for sure.
indeed. Spuddaboom, it's been a pleasure spending some time with you today. Thank you so much for coming on the show. Just look, finish off by telling people where they can find you online, on Twitter, X, and again, what people should do to just learn about, obviously Badger DAO, but yeah, EBTC, what you guys are doing.
Yeah, you can check me out on Twitter or X. Spadaboom1 is my handle. And as I mentioned previously, badger.com, ebtc.finance, or type any of those into Twitter or X. And yeah, Andy, this was great. Appreciate you having me on, and the conversation. It's always fun.
Awesome. Thank you so much, man. All the best, and bye for now. All right, there you go. That was Spuddaboom from Badger DAO. I mean, come on, Spuddaboom. Is there a better nickname, online identity? It's just fun to say, you know. It's like bada boom. I guess that's what was that from? Is that a Sopranos thing? I don't know, but spada boom, same thing. It is just fun to say. I can't stop saying it. Thank you to Spada Boom for coming on the show. Really enjoyed that. A lot of fun. Love to see the Bitcoin DeFi, narrative. As Spada Boom said, it is still early, so I mean, you can't get carried away with these things. But yeah, it's just how the narratives work. The narratives kind of get ahead, and people jump on, and then there's opportunity there if you're first or early to a narrative. Just something to keep in mind, I guess. But yeah, I guess we reached the end of another show. And again, look, exciting times. I mean, who knows what will happen by the time I publish this, but as I record, it's Valentine's Day in the US. We're, of course, a day ahead down under in New Zealand, home of The Hobbit. But yeah, just to give a sense of, as I said, US 51,800 Bitcoin price, and now a market cap of 1 trillion. Exciting times. Thanks for listening, folks. It's the end of the show. Make sure you subscribe to the show. But this was the Crypto Conversation for Brave New Coin.